because I want you to take the contours of what you know about the gold game thus far, and if we could try to do like a reimagining of what this game would look like with digital gold rather than physical gold. For instance, we've danced around this point a lot, but it's probably pretty obvious, right? The paper gold market has been a big problem. Basically, it's again, back to the beginning, a misrepresentation, right? You've got 100 to 2. I've heard it's as high as 200x.
It could be. Yeah, nobody knows the number.
And nobody really knows. Governments have used this as a scheme to suppress the price of gold, to uphold the integrity of fiat currencies. You could check out gata.org. They've done a whole bunch of work on this. Presumably, like if I'm reimagining this game on a Bitcoin standard, that wouldn't work so well with Bitcoin because there's not a financial incentive to centralize the custody and abstract Bitcoin into a paper derivative to make it more transactable because Bitcoin's already digitally native, for instance. So presumably the paper market price suppression of Bitcoin would be less viable. I don't want to say it's impossible because we've got Bitcoin ETFs and we've got paper Bitcoin floating around too. And the tide hasn't gone out to show who's swimming naked yet. So, maybe people haven't experienced enough pain to learn that lesson. But at least it seems like the market would say reset more efficiently on a Bitcoin standard rather than a gold standard. So I just say that as kind of an example. Like I want you to think out loud and linger here on what you a reimagining of what this world that we're in and or going into could look like with the addition of Bitcoin into the already complex game dynamics.
So I think first off, Bitcoin has been easier for the average person to opt out of and have the price respond. Mm-hmm. It's more of a true market. I've called it the last functioning smoke detector. I remember having a drink with one of the world's biggest physical gold traders, and it was in New York, probably 2017. So it was when the sort of the first big run in Bitcoin to like 17,000 or wherever it eventually peaked out at. And he looked at me and goes, Bitcoin's just doing what gold would be doing if it didn't have this gigantic unallocated paper market attached to it. Exactly. So there's that dynamic to start. Bitcoin would have to be a whole lot bigger to be gold. In terms of, if you wanted to contain Bitcoin, if you wanted to try to run the gold playbook on Bitcoin, the ETF model would certainly probably be the most likely way to go about it, which is to say, pay the bribe, centralize the custody, and then, try to strangle it in the crib while you have it all in custody, if you can get enough. And when I say pay the bribe, I mean there is, in theory, a price where people will let their coins move. Yeah. And, that is a way, conceivably, that could be done.
Yeah, because part of the gold paper game that's being played, it's premised on central banks owning 20-25% of the total gold supply. Whereas right now with Bitcoin, they don't have anywhere near that.
They don't have enough.
But an ETF could be an avenue to that.
Exactly. Where suddenly, they, too big to, because, practically speaking, where's it all going to be custody? I don't know if it'll all be at DTCC or wherever it'll eventually be, or all at BlackRock.
I think 10 of the 11 ETFs are at Coinbase custody right now.
Okay.
Fact check me on that. But
I have no idea. I have no idea. So, and that's a very good point, right? Mm-hmm. But that in theory, I tend to blur the line sometimes between central bank and too big to fail because, the psychological, tipping point that we started off with. I don't know that there's a whole lot of difference, right? In critical moments, certainly. Yeah. So those would be I think the ways that it's different and the ways that it's similar. The other thing that I think is different is the rapidly growing industry for creating businesses, apps, applications, what have you, that require the Bitcoin to move as sort of collateral, right? Lightning Network and some of the stuff, or whatever, however you do it,
Needs a transaction layer. Basically. Yeah.
Exactly. So now, exactly. So if the Bitcoin's moving, that makes the ETF get a critical mass and centralize it and strangle it in the crib. That makes that game plan much harder to run out. And that's also very different, right? Because, and the other thing too is it's so much easier to buy Bitcoin than it is to buy gold. Still, real, actual, physical gold. You can have a brokerage account and buy paper gold, but to actually get a physical gold coin, people ask me all the time, they don't know how to do it. And they're in America, and it's hard to do. Bitcoin, once you have it set up, it's a very decentralized way of doing it. You don't have to go anywhere. Buying gold online once you have a reputable broker, that's pretty easy too, to be honest. But most people don't know how to do it. So it's very decentralized. And then the round trip is also cleaner for Bitcoin. In other words, when it's time to sell the gold, that's actually a little, it's kind of a pain in the butt, right?
Physical gold.
Oh yeah, physical. Yeah.
Sure. Yeah. So if you're thinking about game theoretic perspective of governments, central banks, whichever aperture you want to approach this through, well, we know of the games, as we've talked about the games they've played with gold as more or less a protective strategy, right? To preserve the integrity of fiat currencies, you needed to, own some gold and suppress its price in the paper markets. Bitcoin emerges, you don't have a big toehold in that network from an ownership standpoint. It also poses a similar threat to gold, to the integrity of fiat currencies. How do you think they will play this game? I think that we've already heard rumors of BRIC countries talking about mining Bitcoin. We've now got the US, we got Trump elected. He's going to start stockpiling Bitcoin. Apparently there's legislation being drafted for that. Just think out loud through that maze of possibilities.
So I think some of it is a rule. It goes back to the rules changing, right? So when we separated energy and fiat, that was forced the Russians and the Chinese to do what they did with gold. Okay. That then starts to force other movements. And when I say the rules of the game are changing, there's still, I think, many market participants, if not most market participants, that are thinking of this still in strictly financial terms, the game theory. But I think the DoD, I think the national security apparatus is now really running this game for the West and for the US in particular. In other words, they don't give a crap about the fiat currency system.
Okay. So you do think it's become a national security issue?
Yes.
Bitcoin. Okay.
Yes.
Interesting.
And the reason the fiat currency system as it exists has been being used by China specifically to undermine, and look, let's be clear. We let them do it. We wanted this system, and now we're getting it good and hard. You can't send your factories there.
Sure.
And you can't send all this stuff and love it while they're breaking your unions for you and then go, oh, you innovated and now we can't compete with you. And by the way, using that dollar system the whole time to basically, America send us dollars. Great. We're going to take those dollars and we're going to go buy up, we're going to leave the game, right? We're going to go buy gold. We're going to buy copper mines. We're going to buy lithium. We're going to buy the Port of Piraeus in New Jersey. We're going to, all this stuff that is sort of not dollars. And then we're going to reorder the game the way we want it to. And so I think there's still a lot of game market participants thinking, well, it can't be gold and it can't be Bitcoin because both of those things undermine the fiat system and they undermine the bond market. And I think there is a rapidly growing sect, if you will, of the defense and intelligence establishment that are going, we didn't ask the bond market for permission to fight World War II, and we ain't going to ask the bond market for permission to do this again. We're going to dictate to the bond market. And I think within that dynamic, which completely changes markets and what the conventional wisdom of what's likely to happen in markets and policymaker responses, Then the game theory changes entirely. Okay, they're using gold. Well, we can call up a chart of Bitcoin over gold, and we can see on very high face-peeling volatility, Bitcoin has destroyed gold. So let's say, okay, we can go to gold. That's one option. And if we go to gold, yes, that undermines the dollar system, but the dollar system is undermining our defense base. The United States, NATO, lost in Ukraine to a nation with 1/10 our GDP, as everyone made sure to notice and highlight, because we couldn't produce shells, missiles, etc. This is now a national security threat. What do we need to do to be able to produce shells, missiles, defense industrial base in sufficient quantity? Simple. The fiat currency system of the last 40 years has to go. It has to. The post $71 system, reserve status system, has to change to a system with a neutral reserve asset. Has to. And this, I want to be very clear, is very well understood at certain high levels in the defense and intelligence world. It is very well understood. And so they don't care that the fiat system's getting undermined anymore. They don't want to be too disruptive, whatever. Sure. You have to mind markets. Markets are still going to exist. Right. And nobody said, well, the bond market said we can't go fight in Germany and Japan at the same time. So I guess we can't. Right. In World War II. That's not how it went. How it went was the Fed said, we're going to buy every 3-month treasury you offer at 3/8%. Every 10-year treasury you offer at 2.5%. Have a good day. Balance sheet went up 10x in 5 or 6 years. We put in price controls to make sure inflation didn't get too bad till after the war. And if you bought bonds, congratulations. Thank you for the war effort. You're a patriotic American. The S&P went up 5x relative to bonds during the war and shortly after the war. And by the way, you can't own gold. It's illegal. Have a good day. That's what's going to happen again in some way, shape, or form. Now, I don't know about... It's trickier. That's what's going to happen in some way, shape, or form. The bond market. It's trickier because of the system as it's structured. The open capital markets. There's no capital controls. There's no consumer price, consumer goods restrictions, right? You had coupons. You could only buy so much butter and milk and gasoline and what have you. So some form of severe repression, I think, is going to happen. And through that lens, the reason it's going to happen is because we're going to shift to a neutral reserve asset, or the reason it's going to need to happen is because we're going to shift to a neutral reserve asset, which will weaken the dollar, which will change the incentives enough so we're not offshoring anymore, we're reshoring. Right. Very inflationary. Also, you don't want to make gold or Bitcoin illegal because you don't want to impoverish your people, right? If you make gold and Bitcoin illegal and then you reshore and inflation goes through the moon, people are going to starve and revolt because the inflation is going to go nuts. You need something to go up to keep your people whole, not just stocks.
If you enjoyed this clip, click here for the full episode and here for more just like it. Also, like this video to help shine light on the corruption of money and subscribe to stay connected. Thank you.